Good morning. Today's Monday, July 20th. Hopefully, I can get this out while it is still morning. Hope everyone had a nice weekend. We had a pretty low key weekend in the Gaul household. Mother and father in law were in town. Stopped by Saturday and Sunday to hang out for a bit with the little guys. Gabriel and Nolan both doing well. So, Baba, Papa, thank you for coming. It's good to have you guys. Happy to hear you made it home safely to Bluffton. Last week we had CPI and PPI data come out on, I want to say Tuesday and Wednesday, maybe Wednesday, Thursday. Kind of interesting the way it came out because it was, relatively speaking, almost identical, the two data sets. So CPI fell 40 basis points month over month, which was, the expectation was a 10 basis point decline. So came in 30 basis points below the expected figure. In PPI, producer prices also came in 30 basis points below expectations. If you back out energy prices from that data, core CPI was unchanged. The forecast was a 20 basis point increase, so that came in 20 basis points below the expectation. Back out food and energy from PPI, same thing, 20 basis points below the expected result. So with that, the odds of a rate hike continue to decline, which is good. Treasury yields moved lower, kind of reducing the expectation for a near-term rate hike. Still expecting at least one later in the year, if not two, based on the way markets are pricing yields. What I thought was interesting and worth talking about, and we'll kind of dive into it in fall reviews a little more. So last week, S&P 500 was down 1.55%. The Russell 1000 value, so value index, was actually up almost 0.5%, while the Russell 1000 growth was down 3.64%. What we're going to talk about in fall reviews is just kind of the unpredictability of different asset classes. So if you look at headlines right now or turn on the TV and listen to the stock market channel, you're likely going to hear like all the buzz in 2026 has been technology and AI. But just kind of interesting to see year to date S&P 500 up, call it 9.5%. Russell 1000 value, so you're taking basically large value companies in the United States, up 18.86% year to date. This is through the end of last week. Russell 1000 growth, up 1.25%. So in 2026, tilting to value has paid off so far. We'll see what the second half of the year holds, but it's just really interesting, and we'll kind of talk through what we call an asset class quilt, where it kind of ranks every year which asset classes were the best and worst performing, and not uncommon that when you look at 1 year versus the next that you and I don't know how to quilt, but I was going to say not uncommon that you'll see a patch that was at the top of 1 year find its way down at the bottom of the next year, towards the bottom of the next year. And it's just wildly unpredictable to be able to kind of guess or forecast which is going to play out. Which, again, in 2026, if you turn the TV on, I think most of the hype has been around AI and tech companies. And yes, there have been a handful of those companies that have performed very well. But to see, halfway through the year that large values outperforming growth the way it is it's surprising to me. But questions, comments, concerns, we are going to get fall review invites are getting mailed out today, so keep an eye out for those in the mail. And then I think later this week we'll be sending out the calendar invites, so keep an eye out for that in your email. If you're not good with technology, don't hesitate to call the office, ask for Nick. He will be able to help you get scheduled and situated. Questions, comments, concerns, don't hesitate to reach out, and I hope everyone has a great week.